community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. For some reason, the old frog's got in my throat here. I was doing okay on Basil's show this morning, but the frog is back. We could stop this show right now, but not a chance. I love doing this, folks. One of the things I like doing is trading live for you folks, and we're going to do it right now. I posted a chart here of the gold market, and as you can see, we are $1 away from the 38.2 retracement up there at 1827.80. We're $1 away. So the sale would be at 1827.50. Let's call it 1827.50. Okay, and then what we're going to be doing is we put a stop about $3 on that 1831, we'll say. So if it's correct, that's what's going to happen. And it should happen within the next 20 or 30 minutes if it's going to happen. So we'll be on the show here to see what's going to be going on. I'll be doing this live stuff again on March the 8th, which will be a fun day. But, you know, folks, there's a lot of stuff going on in the world of computers about this Chat GBT, the program by Microsoft, which is an AI program that has really put the writing world on its ear. And about an hour ago, it was down for about 10 minutes, and the writing world totally went Panicsville, but it came right back on. It's just so many people using it. We'll be able to look at whether we're going to be doing this thing or not. But anyway, watch this gold here at this 1827.50, 1828 level. It's going to be very interesting if it gets to that level. Anyway, I will be trying to. By the way, if you're listening to the show, please don't Skype me while that's happening because it interferes with my thought process. And if you have a question, just call into the show, 877-927-6648. Let's get to the stock market, folks. We'll worry about the gold here. It's going to tell us if it's going to get filled or not here in the next 15 or 20 minutes. So we'll just have to wait and see if that's going to happen. But I want to go through the stock market first because we have some really important things that have been happening here from a pattern recognition standpoint. This is the cash S&P. I want you to see this. This is where we are. You notice here the low that we made on Friday. We all know this because we were talking about it while it was happening. That was 39.48. The low was 39.48, 47.75. 39.47.75. That held, and of course we rallied up to 39.22 so far today. There's two reasons why that is important. Is if you look at this going back to the beginning of the bear market, which was January 4th of last year. We're now 14 months into it. Of course, it bottomed in October, and we have higher bottoms now. So we're technically having higher bottoms. We're in a bull market. And there we are sitting right at the 61% retracement of that move right here. It's taken about, how long? Well, it took us about a month or so to get here. But look how it lines up symmetrically with all of the highs through here. I mean, every single one of them lines up. That makes this a 20-man line. So if this thing takes off, it acts like a fulcrum. In other words, the bottom side shoots down and the top side shoots up, and we can go a long way. I have no idea why it would do that, but it certainly could do that without any trouble at all. That's one of the things that we want to talk about. The other thing that we want to talk about is the Japanese yen versus the S&P. If we look at this, there's going to be four things that we're going to be looking at here to see whether this bullish case has legs or not. But as we look at this, this is the S&P, and the way it's set up, it shows the dollar yen, okay, versus the S&P. And notice there's a very, very high correlation. So we should be looking at the Japanese yen to see what the Japanese yen is doing. And if we take a look at that Japanese yen chart, and we'll get this up here right now, and you'll be able to see it without too much trouble. We'll get it right here. you'll notice as we look at this, we are setting exactly, to the absolute tick, which was made on Friday. We made a matching high Sunday night, but hit it the exact 382 level at 136.60, folks. The high was 136.58, I believe, and now we backed off about 50 pips from that level. Okay, no, so that's the important part of the things that we're looking at. Now, not finally, but one more that is extremely important, and we've mentioned this twice already today. This will be the third time, and that is we're going to be looking here at the Treasury bond futures. And this was very early in the morning. They actually bottomed at around 2 in the morning, Tucson time. That was about 4 in the morning, New York time. And you'll be able to see they hit the exact price, folks, right there at 123.14. Now, I ask you a question. If you got two of the biggest markets that we trade, Treasury bonds hitting the exact 618, and U.S. stock market E-mini S&P hitting the exact number at the exact 1.618, and the Japanese yen, which is related to money, follow the money, Woodward and Bernstein, and that hits the exact 382. You got three levels of Fibonacci there that you have to pay very close attention to, because if those levels are broken, that tells you that this mirror that we're looking at might be broken, and you don't want to have anything to do with it. Until that happens, one would have to assume that we might be in a rally mode. That's what I would think. So that's what I would be looking at today, and that's what we were in fact looking at today. Coming in this morning, and this was one of the things we covered real early in the videos that we send out. If you take a look here, what happened over the last day or two, well, it's like several days here because this is a little bit longer chart. This is the E-mini S&P, and as you can see here, this is from 3 days ago. You'll see we had this, look at this beautifully symmetrical 3 drive to a bottom pattern, folks. Drive 1, drive 2, drive 3. Now, all I want you to do is picture this and blow it up, because look what you have here. You have drive 1, drive 2, drive 3. These little smiling men, what you think what they are nothing more than symmetrical bottoms from 1, 2, 3, 1, 2, 3, and you can see the ABCD, the expansion number comes right down here to the exact 61% retracement at 39.47.75 was the low. That number was 39.48 while we were in the air. And if you remember here, we were making higher bottoms in here. You see the higher bottoms that were happening here? That's just the opposite of what's going on. That's what you're doing when you're day trading. You're trying to find these little patterns that give you a spot standard. You notice the market goes up, it pulls back, and then it explodes all the way up. In fact, it went a little bit higher. It went up into this area right here at 20. We didn't get anywhere near this, but we got up close to this level right here. So and then we backed all the way back off down into just about right here. Nothing dramatic, just basically a 382 of the whole move, and now we started bouncing up a little bit. Now, this will all fail if we get down below this level here, 39.85. We get below 39.85, this is telling you that something's wrong with the program, and you don't want to be bullish if we get to 39.85. The last price I saw was around 4,000, so we'll see how that works out. Let's take a little break. We got some more numbers to show you, and 877-927-6648.
Currencies, commodities, and bond markets are as important as ever right now with how they're driving the volatility in equity markets across the globe, which is why it's a great time to try out Teddy Kegstat's Tiger Forex Report. Teddy Kegstat breaks down the Forex markets every Monday using his 30-plus years of experience as a trading veteran of futures, Forex, stocks, and options. Teddy releases his weekly Tiger Forex Report every Monday morning with coverage of all the major currency pairs, including the dollar index, the euro dollar, pound dollar, dollar Swiss, dollar yen, as well as many more, and he also has weekly coverage of the crude oil market and the 30-year T-bonds, as they both influence Forex markets tremendously. When you sign up for the Tiger Forex Report, you also gain instant access to Teddy's 60-minute webinar archive he just hosted, Forex Strategies and Fundamentals, What is Behind the Tiger Forex Report. For all the details and to start your 30-day Tiger Forex Report subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Are you looking for a way to consistently add winning trades to your portfolio? Tom O'Brien is here to help. Tom O'Brien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom O'Brien founded TFNN over 20 years ago to help educate investors just like you. Tom's daily market newsletter, Market Insights, is published every morning when the markets open to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom O'Brien's newsletter, Market Insights, today and try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, folks, I've been asked to review one of the trades that we had on for our 24/7 group, and that is the soybean oil. All I'm doing now is I'm looking at this on a 4-hour chart. So you can see it goes back well over 5 weeks. You'll notice in that dark blue up here at the top, you'll see that 64.30. That was where the buy stop was. The sale came in at 63.90. And then, of course, these were the profit objectives. There was the first one, a 382 retracement. There was our main profit objective right here, which was $1,600. And then it rallied again, another one, and then moved to the downside. The person asked me the question, how did I know that it was going to rally at the 382 both times? And the answer to that, Brian, is that I don't know. All I'm doing is I'm looking to see how the market repeats itself. In other words, if it did this once, I have to assume that it's going to do it again. If it did it again, I'm going to do it again. So I'm going to keep watching to see if it keeps doing that. That's all I'm doing. Any of you that have had children that ride a bike or teaching them gymnastics or whatever it happens to be, gin rummy or poker, you know, they learn very, very quickly. When riding a bicycle, you know, they can fall down and get scraped and stuff like that. My daughter, Laren, when she was 5 years old, riding her bike, 4 or 5, I was quite young, I think 4 or 5. Anyway, she would not use training wheels. She literally got on her bike and she wouldn't let me help her. She got on the curb and she would go around the cul-de-sac, falling down, never crying, just getting up, bleeding, didn't care. She finally did it, and then she was riding around, circle, 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 faster, 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 because she knew how to ride a bike then, and a big smile on her face that she did it all by herself. I'll never forget that. Then I wondered, you know, why she did so well in school. She couldn't go to high school. She could only go to a sophomore in high school. And she said, I'm done with school. I'm not going back. And what she did was she went to junior college. At the age of 15, she went to a junior college. She had already passed the GED high school exam. She was just a sophomore. She ended up being a pretty smart kid. Anyway, that's neither here nor there. But anyway, this trading is the same way. You know, you got to learn to walk before you can run, and just watch the repetition of the market, folks. That's all these numbers are. It's just showing you the repetition. What I'm trying to do here is, as I'm showing you these things, why I think the stock market has a chance for a pretty good bottom in here. If we go below 39, 47, the low we made on Friday, there's something seriously wrong. We know something seriously wrong if it gets to 39.85. I just saw a handle at 40.01. So that's neither here nor there. Now, we haven't got filled in the gold yet. We were a buck away before, so maybe we're not going to get filled on that, but that's the one that we're going to be watching. Early this morning, when we were on the show with Basil Chapman today, I was pointing out to the folks, because ABCs happen all over the place. Basil happened to be very busy today, so I was fortunate enough to do his show. But here's where we were. And this was right after the market opened. You can see this was the opening run, and there was a sell-off. Right here was the opening right in here. That's the opening in the New York Stock Exchange, and bada bing, bada boom, it goes all the way up and makes a beautiful ABCD. There was the mid-morning low after the high had been made up there. I forget what that price was up in there, but there was the perfect ABCD right here. And I said we can go down below these levels only to 38.85. Because if you went below 38.80, let's try that again, Larry. 39.85. If you went below 39.85, that would violate this bullish move because the retracement should not be any longer than the last major move, which was back in here. So you can go down to 78% of it, but you can't go down to even, and that's why we're watching that number. And I just saw a price of 40.01. Now, the key level on the upside is if we can get the S&P to close above 40.50 today or tomorrow or the next day and not violate 47.75, then you got a pretty good chance to look at. Looking at this on a shorter term time frame, this was given to us by MEMC over there in Clearwater, Florida. Hold on one second. I want to get up here so you can take a quick look at it. This is where we were when I was doing Basil's show this morning, and I'll go through these numbers again. There was the pullback right here. There was the move here. Now we got up to this level right here. That was nothing more. You can see the perfect ABCD that she's drawn right there. That's that perfect ABCD right here. There it is right there, 1.618 expansion. And now that's why we can't get below this level here. If we do, that's going to mean everybody that bought this during the day is going to be underwater, and they're not going to be happy. So if it starts to go down and we get below here, then they're going to turn the lights out on the bulls for a while, I would think. But right now, nothing looks any different. We're still heading up to that possible target at 40.60, and until that happens, you have to stay bullish. That's it. We're looking at, I think the last price I saw was at right around 4,000 even as I was watching it. So I hope that is important as we look at some of these things. I wanted to share with you another type trade and then bring it up in a different way. But here was the level that we were watching for, and this was actually as it was going on. Hold on one second and get this up here. Looking at those old Fibonacci numbers again, sometimes when they hit, that makes you a believer. Here was crude oil, okay? There was the 61% retracement. Notice right here, this was a 382 retracement. Now, we bought that last night. This was a beautiful ABCD right at the 382, and you buy it with an 80-point stop. It rallied $1,600, matched a new high, and then what we did is we don't know what's going to happen, so we put our stop at break even, okay, and all of it, as soon as it broke even, look, it went all the way down to the 61% retracement. Now, this is important. And I'm going to try to give you an idea. There's a lot of stuff going on about that ChatGPT with Microsoft and artificial intelligence. And I've been messing around with artificial intelligence for quite a while with a very small budget. But, got some pretty good ideas just from, where timing is involved when the markets move usually within about 45 minutes at the same time, just about every day or every other day. That's what we're watching at. But here's what we were watching here at the time this was happening, and it was quick. You'll see here, this is the green line that you're going to see here is my AI program, and I'm going to be explaining that in depth on our show here on March the 8th, but you can do this yourself. It's not really hard to do. But there's what you were looking for, is a market to come up and back and go a little bit higher. That's what and remember, this was the exact 61% retracement right here. So that's where your best possible opportunity was. Well, in the Floor Trader's Handbook, you're doing the same type of thing right now. Speaking of that, those of you that get the 24/7 newsletter, I really hope that you read it extensively. And John Jameson writes this for me. And 2.5 years ago, he wrote an article, the newsletter from November of 2020, November 1st, 2020. He said what's going to happen in the next 2 years. And all he did was mention that, and the fact that everything that he talked about 2 years ago with this artificial intelligence and all this other stuff that's coming is happening now, folks. So get ready. These computers are just getting started. 877-927-6648.
If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Okay, folks, we were talking about the E-mini S&P here, but I wanted to show you the high today was a 78% retracement of the high we made before the big move down. That was on Thursday. There was your Friday's low right here. There's your 78% level, your A, B, C, D move up. And then we moved down to right here. Remember I said this low was so very, very important? Okay, now look what happened. After that low, all we've been able to do in the last few hours is to rally up to a 382 retracement that came in at 40.01. Now, if we start getting above 40.01 here in the next 2 hours, that's going to be incredibly bullish because this is this price that you're looking at right here. And to do the work yourself, I mean, don't listen to me, but go down here to 39.47 up to the high that we made right here. Find out what that 382 retracement is. Hello, operator. And look what happened. It stopped right there. So, and what did it do? It stopped right there on the upside. So if we get above 403, 404, tells us we're in the mood. We're still going to go higher, but we cannot break this last low that we made down here at that 38.80 and change. Can't do it, because if we do, that's breaking the 382 off of this. That's big trouble. So those are the kind of things that we're going to be doing these on the all day session. I do these all day long. Do I look at the markets all day long? No, I do not. I watch for the beeper to go off at those prices, and then I go take a look at it. Otherwise, I'm doing some other things. I quit watching all the ticks go up and down many, many years ago when Mark Douglas was working here with me, those years that he was writing Trading in the Zone. I mean, when the beeper goes off, the pattern's complete, you put the order in, and bada bing, bada boom, then you want to see where you are. Okay, here's one that we did when Basil's show early this morning. It hasn't worked as of yet, but it hasn't been stopped out yet. Let's just up here to let you folks see it. This was in the Euro. It was a perfect setup. And I will walk through it, and you'll see where we are right here. And you'll see right at this level here, right there at just about even at 1.06. Okay, we said if it gets above this level here by more than 25 pips, it's probably going to be wrong. Well, it's trading right there right now. It went up a little bit higher, then went a little bit lower, and it's still right here right now. So that's a valid trade. And not watching it didn't lose anything. You're going to find this really surprising, boys and girls. Do you know the people that are trading against you really don't care whether you're watching or not? The only reason you're watching is you can watch the prices go up and down on your equity run, and that's the absolute kiss of death. Because once you start measuring in money, your mind gets messed up. You got to think in terms of doing the right thing, and the rest of the stuff will come easily. I mean, it really will. It will come very, very easily. There's no question about it. Getting back to the bond trade, I wanted to bring this up to you again because I didn't get the chart up long enough to show you. And here's one that you like to see it a little differently than you would like to. But I said to buy it at 123.14 and put a 12 pip stop on it. The problem is it only hit 123.14, and I think one person said he got a few contracts off at that price. Other people that had orders setting in there that had their never got filled. So it depended upon the time your order was, because once they put the order in, they're stacked up in order. In other words, if you put your order in at 7 o'clock, you get precedence of the guy that puts it in at 8 o'clock. So it depends on when you put the order in. So one tick away, and that's how it goes. And it goes back below it. Chances are that's not going to be good, but really nothing's changed at that level. It has to close below by substantially, by more than 10 ticks. That would be at 122.20, and they would say, yeah, that 618 broke, and it's not good anymore. So that's part of the reason why we put stops in, because we don't know whether we're going to be right or whether we're going to be wrong. As far as the other trades that we had on, we were looking at the short the Japanese yen. And I mentioned to the folks Sunday night on my video, I said, if this market doesn't go down on Sunday night, you got to buy it, because all the things were set up for it to rally. The bonds, the Japanese yen, the S&P, the NASDAQ. One other thing that was in there that was important too, the bonds and notes. And there were 4 of them there that were very, 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 very important. I'll go through them again because they're that important. The number one is the S&P cash hitting the exact 61% retracement. Number 2, the S&P futures, the NASDAQ futures. They all hit all these numbers at the same time. That's really hard to do, folks. When you stop and think of all of them, you're against these algorithmic traders, and they certainly know what these numbers are because you see them all the time. And when they explode through there or break to the downside, it's the same thing that goes on. They know what these numbers are. It's not a mystery. All we try to do is to see them ahead of time and see if they're going to work. That's pretty much it. Someone's asked a question about the gold market, folks. Doesn't look like we're going to get filled up there at that 1828. We got within within a dollar. We were, actually a little more than a dollar, about $1.20. We got to 126.80. We were trying to sell at 127.50, 1827.50. So that didn't get filled. So we'll be watching that through the rest of the day, because if we get up there, we're still going to sell it, and we'll put about a $5 stop on it, $500, because it's 100 and $20,000 contract. So it's that's not very much for a $120,000 contract. So that's pretty much what we're watching here. Someone's asked the question, how do I know when I'm wrong? Well, easily you get stopped out. Then you know you're wrong. Okay. The other thing is when you see a market run up like we had in the stock market, and it stops exactly at the 382, and if it doesn't get above that and starts down, then you know you're wrong, because so far it's not violated anything. I don't know where it's trading now, but it's pretty much, we'll see, where is it trading at? Hold on. We're trading at, it's 4 points below. It's trading at 39.97, but that's still not enough to do it. Now, I noticed that the gold is broken about $3 from the high that we were looking at. That didn't help too much. I didn't get that filled either, so we'll pay attention to that. Anyway, all I'm trying to do when I show you these things, folks, is the fact that if you learn how to do these numbers, it gives you risk control that you just don't get unless you practice them. And they come from a series of books that, some of them I've written, but others are, the old famous books, Haddam, Gartley, and stuff like that. And all I do is I put these ratios and patterns together. They don't work all the time, but they work some of the time. And that's why, I like to show them, yeah, sure they do work. ABCDs work a lot, but boy, sometimes they don't. And boy, that's when you got to be really careful. When the market starts cascading down, just look at just give you a perfect example here. I'm going to look at the E-mini S&P from Friday, and I will show you one of those situations, because this was a place where we had been, you'll see it as we get up here. Look at the 382 pattern here, folks. There's the 382 pattern that we were looking at. The market came all the way down. That's a $4,000 move, a $4,000 rally. And then right here, you see how it has the lower tops in here? That's when you knew your trend was down, because look, you got lower tops, okay, coming in here. Now you start lower bottoms, and then they don't even give you any chance at all. You don't get a 382 retracement here till on Friday. Okay, and then here was the action overnight. Then you backed off just a little bit. You didn't even back off to a 382, and now you went up here, and now you're in the middle of no man's land. That's why you've got to get above that 405 level to make this thing look like it's got legs. I hope that helps. 877-927-6648.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Okay, folks, we're back, and I put a 15-minute chart of Tesla up there. Someone asked me a question about it. But anyway, we've looked at this, of course, on the daily. We looked at this every day while I was down there at that 109 level. It looked like it was going to be the bottom, and that certainly, was the bottom. And, of course, it had one heck of a move. That was way back here. This is the nearby. There's your perfect A, B, C, D here to the downside. And if you looked at the next move up, that made this a 1, 3, 5 pattern. Well, we were trading in 15 minutes. This is a lot of money because it takes 2 days to complete the ABCD. Now, there's a perfect Gartley right here. That was on Thursday, and then you can see Friday's action. And then today, it gaps up, and look where it went to. It went to the 61% retracement of that move, and it's completed an ABCD. So in order for Tesla to continue to be bullish, it's got to start moving above here. And it's got a really good chance because of this gap. And even on the sell-off today in the stock market, Tesla can hardly back off by more than $1 or $2. So these patterns work pretty good. Look at this little ABCD right here in the middle here. There's a beautiful 382 retracement right here. This takes just about a day to form. And then about 2 hours to form, and then down right into the close. The next morning it bottoms, and that's because of the ABCD and the move up, ABCD, ABCD. That's all I'm doing is trying to find those opportunities that say, yep, this might be it. And, I don't worry about the fundamentals. I don't worry about the reports. I can't do them all. I don't trade stocks. I'm bringing this to your attention because it works just as well with stocks as it does with the futures and Forex and stuff. But the margin is much higher on the stock market. Plus, the volatility, you don't get that perfection that you get with gold and crude oil and some of these other things with these stocks because there'll be an earnings report or somebody will come out and say something. It might make an aberration for a short period of time, but it's going to go right back to that sequence of what it's looking for. Now, I promised you guys that Jim Bartolione would be our guest this coming week for the natural gas. As I recall, he said he really felt that natural gas was going to be bottoming. I'm going to show you just a little bit of what Jim was looking at, and when he does come on, which will probably be next week, we'll take a better look at it. But we've had a pretty good run here now. We went from 205, we got up to 268, I believe, today. Which is a pretty big number because remember we bought it at 286 from the long side and we're stopped out within 2 hours at 276, and all you had to do was go short. And of course you can see how these moves are symmetrical. You see the symmetrical move that he had right here. He's showing you that that's exactly what we had here, and it was correct in both time, okay, and in price. In other words, this move up was equal to that move up, and this move down was equal to this move down. And that's all that Jim was trying to show us. And it's had a pretty good run. I don't know what it's doing today, but that's what it's been doing. So we'll keep, when Jim gets on, and he'll have time, he does traveling because he still does work for the Navy. And he's one of those lucky people that very, very smart, and they realize that. So they've kept him on board doing some of their things that they have to get done, whatever those top secret things are. Who knows? Okay, let's move on here. Let's see where these markets are for a second. We got about 4 minutes to go in this segment, and we're down. We're always down to 39.92 now in this little puppy. So that's going to be interesting to see if that does it. We'll have to wait and see. Now, those of you that were listening to us last week, if you'll remember, we were talking about one particular market that looked like it was getting ready to have some type of a major break in here, and that was the live cattle. We already spent a lot of time on the soybean complex and a great deal of time on wheat. Boy, that's going to be a beauty in about 8 days when that next full moon comes up on March. Oh, that's March the 8th. Shut the front door and raise the rent. That's the day we'll be talking. Well, we'll have some fun that day. Anyway, look at this. There's your 3 drive to a top pattern, A, B, C, D, multiples, everything up here at 166. That was a sale. The buy stop would have been 167. Right now, that has about a $500 profit in it, and we expect it to get down about 4 or 5 more cents. So you'd be risking, $500 to make $2,500. That's really what your goal will be, and that's still in an uptrend. You see, you're in a very strong uptrend through here. That's how you determine the trend. If the trend is higher bottoms, you're in an uptrend. See, higher tops, higher tops, higher tops, higher tops, higher bottoms, higher bottoms, higher bottoms. And if you do a trend channel, across here and across there, you see how the market goes up into a channel, just like they were doing in here, and then they broke out of that channel. So that's what you want to be paying close attention to. So these are a few of the things that we're watching here, and that's what we're going to be teaching about on March the 8th too. One other question someone asked about, and that is to take a look, if I could, at natural gas today. And I took it off my watch list because I'm watching so darn many things. I'm watching wheat and cattle and soybeans and all the other stuff. But give me 1 second and I will get this natural gas contract up. And there we go right here. So give me 1 second. Well, we're up there. Well, we hit 270. By golly, that's a pretty good deal. Hold on 1 second here. And we still might get this gold. It's still coming up. Hold on. Let's take a look at the hourly here. And you'll see, we've had a really nice run here in the natural gas. Let's just, I'll just draw the first pattern in that would have been this is a really nice one to teach with. Hold on a second here. Here we go. This is a hourly chart now of the natural gas, and we'll get it up here. You'll be able to see there was your first Gartley pattern right here. You can see there's your 382 retracement with the ABCD right here. Okay, and then there is your second. There's your 382 pullback right here. And now we're going up. We don't know where this is going to be, but folks, what we're going to be watching now is to watch for a pattern on the downside where we get a nice ABCD. I want to get a nice ABCD that just doesn't keep cascading down. I want to try to find one, maybe the 382 ABCD here, let's say 2-3 days from now, maybe Thursday, Friday. We want to watch that. But that's on my watch list now because it's already taken out to the upside. Okay, that's it. See, once it broke above here, that told you that you had a minimum of an A, B, C, D, and we went right up to a little above it, and then we backed off. We didn't back off much, so it's still going higher. They might have some shorts trapped in there. Holy cow. That'd be really surprised if they had a rally in that thing that might last more than this is the, let me see, we're in the 1, 2, 3, 4. We're in the 5th day of a rally now. For that low we had at 205 when we had Jim on the last time. And we'll be watching it as it starts to unfold because we want to be watching for a potential buy now in the natural gas. Remember, we bought it at 286, out of it at 276, and now we're going to be looking to buy it back again when we get a real nice ABC at a 382, much like we were looking at in the soybean oil on the opposite side. And those of you that get the thank you for the compliments. I spent 15 minutes on one video on wheat, and everybody really liked it. But whether it continues or not, I don't know. But it really showed the harmony in wheat. And of course, it's being one of the major grains that people use. Hey, let's take a break. 877-927-6648.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Okay, folks, I posted the chart of the E-mini S&P as we've been going through this show today. There was your 382 retracement right here. So all I'm going to do now is to move forward, because if we can get above 40.05, this is going to be a very, very positive. But if we don't, we always have to figure that out. We want to look at what would be the possible scenario, and the market still remain bullish. And it can do this a lot because these algorithmic traders are in there. There's our 382. The ABCD would measure down into this area right here. Below here, it's lights out. I mean, it's going to be really, and below here, it's major lights out, because this is a one-day rally in a bear market. Shut the front door and raise the rent. That's not good. But right now, if we can get above 40.06, 40.07, we start moving higher. That would be great. But if we don't, and we get down to this level right here, this is going to be the key level. That's around 39.75, I believe. The low here being 39.47.75. So that's what we're watching here. The first stop is right here. We get below that. That's right around 39.89. We get below that, then we're heading out towards these levels right here. So that's what we want to be watching for, okay? Very, very important. So we got just a few more minutes left in here if we have any calls coming in. Someone's asked a question, how do I determine risk? Folks, it just basically, it's a dollar amount. On gold and crude oil, you got a risk about $1,000. Same thing with the S&P now with the volatility we have, $1,000. There's time you can do a lot less, of course, if you're on a 10 or 15 minute chart, but on a 30-minute chart, you just about have to risk those because these numbers are pretty close, but not all the time are they going to be perfect. You know, we had perfect numbers today and Friday, but that's not always the case. So you've got to be able to say, what is my risk going to be? Anyway, that's it. So live every day in an attitude of gratitude, and may God bless, and I'll see you on the flip side tomorrow.